Welcome to TradeTheNBI.com. This is John's report is for July 29th, and we're going to end the month here. July's been pretty positive, so all those sell in May go away. Looked really ugly in June, but we've pretty much gotten right back to where June began as well. So not bad overall. From a NBI reading, we're still magenta well above 33 here and rising. We had just that brief dip and immediate dip of the orange. Positive extreme took place the other day, so we can expect that the low of that 39.94 going to be revisited again. It was kind of a nice day because we came exactly back to the 61% Morganacci line, which is about a third retrace after a big move, which is perfectly normal. And as soon as we did that, they turned it around and we hit the 76, came back, closed right underneath it, and then the pre-market here has popped us up. And of course, NASDAQ has been the leader on this entire setup from the start, and it's continuing to push things through. Of course, we had some earnings that came through, and everyone seemed to like what was happening. Despite all that good news for the euro, it just can't seem to get out of its own way. Every time there's a pop, there are just plenty of people willing to sell into it because they see, things like Germany has shut off all the hot water in their government buildings and are limiting lighting. So that's only going to get worse, not better, unless something changes, at least from the Ukraine sanctions situation, which doesn't appear to be on the table at this particular stage. Gold making its rise despite all of this supposed recessionary talk. It's interesting. You have the Fed saying no signs of recession. We have 2 quarters of consecutive negative growth, which is the definition of a recession. But of course, the White House says that you can ignore that that's no longer the reality, and just pretend. So we're going to ignore that there's a negative GDP for the last 2 quarters because everything is good. And from an oil standpoint, still hovering around that 100. So we've had enough time now that the rate of increase of things is not going to show off inflation continuing to spiral as much as just staying elevated, which they'll tout as somehow being beneficial. But, if you believe that inflation was only running at the 9.1 that they were talking about, you should just go back and use the math that they used in the 1980s, and you would realize that we're closer to 17% inflation. But absorb that for a second. That's a 20% loss in buying power, which makes it rather comical when you consider where interest rates are here and declining because of the expectation that the Fed will have to ease. Even though the Fed insists that that's not what they're going to do. So the market and the Fed are at odds, which is never a good idea because, as I've touted for the last decade plus, don't fight the Fed because you will not win. The Fed will get its way regardless, and even if they're wrong, which they happen to be wrong quite often, they're still going to do it their way. So that they've completely switched from the quantitative easing, despite the market believing they'll be forced to do it. You'd be surprised. You really aren't going to force them to do anything they don't want to. Bitcoin responding in tandem exactly with the market, so moving right back up above. And that between that 19-20K range has been a pretty strong support range for it. Pretty healthy. I still think Ethereum has been the best from a algo trade standpoint. The ranges are excellent. The reading is very clean. Just beautiful work with the computer, the way it trades these. And so it's very nice. You can see in pre-market coming through. It's had some softness going in with those gains already tapped in there. The 50K, beautiful from that turnaround of the magenta coming over, orange dipping, everything flipped around and took off after the other, 80 plus point win there from the 50K on the Opus T program, or just we call it the algo strategy. 50K, well, it was pretty nice. I mean, we had some softness early on that began early, and then once the buy started, and that was literally just after the open setup there, magenta riding above yellow in this particular case, white sub 10, but more importantly, DOC, and I mark it here, cyan under red, always buy, and there really isn't much to do. Even within the brief decline signals that come in, the early part of it, when you're getting these kind of rallies, if you're going to jump on those, you have to do it literally when it first begins, because the likelihood is you're roughly looking for anywhere between 4 and 6 points on this kind of move. And so like from the 48 to where it, dips around and starts to make the pivot, it only dipped here to what, 44 low. So just barely getting in there. That's where one of those where it's just like, okay, if you want to exit the long, fine, just to be on the safe side, and then re-enter. From a short standpoint, I don't know that it's all that great when you're looking at this cyan that deep as well as red so far over. I mean, yes, you know that you're in likely correction point, but usually doesn't fade too much until we start getting a successively lower histogram. So it's the second set of readings here that I would find a little more attractive, and just as we created DOC spread, and I think that we did get more room out of that. But every time that took place, and even with the white spikes, there really weren't seeing any decay in the magenta for the most part, and that just kept turning around to new buys, breaking out into upper levels, and that proceeded all the way through the end of the day, and then even here in post-market, kind of trading sideways from that super peak. But again, this is where you break out your little horizontal lines and you start looking at positive extremes. First one being all the way down. And when you get these long wicks, there's something I like to do. I usually like to take half the wick distance, which interestingly enough correlates directly to where that original sell signal is. And then of course we have the further ones up because it was a series of them. And then the upper portion is already filled, so not as relevant right now. That's the long and the short of it. As always, I'll be updating indicators for August to begin, and I think that we still don't have any agreement as to where this market is deciding its strength is. I know there's the strong bull case of this potential easing, but I think the headwinds that still exist in the intermediate time make it tough to get to that typical 4,300 that a lot of people want to be talking about. So we'll see if they're able to do it. They're close, 200 points away, but it could be a tough slog, particularly in the dog days that are about to approach. So we will continue to just follow the readings and go with what it tells us, and that's always the safest play, using the MBI readings. Not going to fight it, just like we don't fight the Fed. As always though, trade well. We'll talk again later.